Inflation, world over, people are fighting high inflation. We are one of the rare country who has a real positive interest rates and inflation below RBI's target range. Lower middle class and poor people have not benefited as much from this growth as the rich and the upper middle class. The foreigners are feeling left out, that India is such a great story and we are not overweight India, we are neutral weight India. Everyone else's who is in our peer group, their economy has started going down. And hence we look much, much better, much, much brighter. Look at our competition. Russia, no foreigner will go and invest there. China, it is cheap, undoubtedly, but they have scored self-call on technology, on their entrepreneurs. And now there is worry that was इस country में foreign minister का भी पता नहीं है, तो अपना पैसे का क्या होगा? South Africa, there is 12 hours of power cut. Brazil, a very, very open communist agenda. Turkey, the currency keeps on falling faster than you can pronounce Turkey. Effectively, if you are a global investor, which are the countries where you can put your money to work? Others have underperformed so badly that we are now looking far better and brighter with what we have done. And this is what most domestic investors forget about it. It's always about relativeness. In relative terms, we are looking better and brighter. Is flows. Because you are getting confidence on the economy side, flows are coming. Domestic mutual fund buyers, domestic retail HNI investor buyers, foreign portfolio investors buyers. Who are the sellers? Only the promoters and private equity venture capital funds. There is aggressive buying, less aggressive selling. Prices are undoubtedly likely to go up. So this is combination of long-term fundamentals and flows, which is driving market higher. There is divinity in our economic numbers. Growth was below expectation, now it is above expectation, and it is the fastest growing major economy last year, this year, and probably next year. Inflation, world over, people are fighting high inflation. We are one of the rare country who has a real positive interest rates and inflation below RBI's target range. Now this month's number, because of tomato prices, will go higher, but on an average, it is still likely to be within RBI's target range. FX reserves, we were going down at $525 billion. We are now at $600 billion plus. Our oil prices, thanks to Russia, Ukraine, was supposed to be 3-digit plus. Now it is in 2-digit. Geopolitically, India is beneficiary where it buys cheaper oil from Russia and jet engine technology from America. And both of them are interested in wooing us. We had a trade deficit problem till December 22. Numbers were in excess of $25-30 billion a month. And boom, Jan, Feb, March, number came for balance of payment at just about $1 billion. You look at monsoon. This is the first time in 60 years where Mumbai and Delhi got monsoon at the same time. In Mumbai, monsoon was delayed by 20 days. And now it has recovered everything with one of the highest rains in the month of July this month, and month is not complete. We were always less productive, less competitive nation. And now we are improving our productivity and efficiency. The digitization of our economy has created productivity and efficiency. The infrastructure creation story in India is one of the most underrated story. We are building between 2014 and 2024 as much as was built between 1947 to 2030. Highways, port, airport, railway electrification, coal mining, power production, all these numbers, what we did in 67 years from 47 to 2013, we are replicating virtually in 10 years from 2014 to 24. So, Vaidhi, undoubtedly, what is our weak point? What is our cause of worry? It is the uneven recovery. The lower middle class and poor people have not benefited as much from this growth as the rich and the upper middle class. And this is reflected in variety of data. Till March 23, volume growth of listed FMCG company in rural market was negative for 6 quarters. For 1.5 years, India's listed FMCG company didn't show volume growth in consumer staples. In those 6 quarters, urban consumption also was negative for a while, and then it became marginally positive. Number 2, there were contradictory signals. Tourism travel was at its peak, hotel rooms were not available, and yet there was 29% drop in first 11 months of last year, FY23, in non-suburban railway traffic. I can understand suburban railway traffic coming down because people started working from home. But what explains people not using railway like before, especially when tourism is at peak? We saw reduction in two-wheeler sales. From peak, it is down from 2.5 crore vehicles per year to 2 crore vehicles per year. 50 lakh entry-level bikes and little above that is not being sold from the peak level. If we look at the concentration of power, whether it is in ordering Zomato's food via Zomato's app or share in UPI payments, clearly a small minority contributes majorly on value terms. If we look at premium brands versus, let's say, mass market brand, in premium brands, there is volume growth. In mass market brand, there is price resistance and value degrowth. Undoubtedly, there is no denial to the fact that the bottom half of the pyramid hasn't participated in growth story as much as the top half of the pyramid has participated post-COVID especially. Now, there are signs of revival. One, rural FMCG volume growth for June 23 quarter has turned positive. This is after waiting for 6 quarters. Companies which are engaged in consumer staple business, they are indicating that now they are seeing better demand revival. Monsoon has come out reasonably well. Obviously, it is excess in some places, deficient in some places. But overall, it bodes well for Rabi crop, if not for Kharif crop. That will have its own positive momentum in rural economy. Private capex, which was on the back foot for a while, pre-COVID as well as post-COVID, seems to be bottoming out, and we are seeing more announcements coming from private sector. We are hopeful that with their balance sheet deleveraged, it should translate into action on ground. Obviously, people will do it on a gradual basis, not in a steep manner, but private capex from here onwards will continue to rise compared to the past. Government spending is in full swing. We are seeing that in infrastructure creation. So while post-COVID till now, bottom half of the pyramid has suffered, there is expectation that from here onwards, we have probably made the bottom And thanks to good monsoon, spending by government on infra, private capex reviving, we should be able to see positive volume growth here onwards. And June 23 quarter did show a positive volume growth. I think retail investors have matured a lot. There was a time when they generally used to come after markets have moved higher, and they used to make the top of the market, like we saw in 92 cycle, 2000 cycle, 2008 cycle. But 2023 and 2020 retail investor is different lot. In 20, FPIs were selling, retail bought them out. In October 21 to June 22, FPIs sold 250,000 crore of equity, retail bought them out. And now retail are doing profit booking. There are countries where when markets go down, they say you can't sell on a downtick, you can only sell on an uptick. Because मंदी का मार्केट में डाउनटिक में नहीं बेचेगा आदमी, जिंदगी भर नहीं बेच पाएगा. All these things, when people juxtapose with India, you wanted to sell $8 billion worth of equity in one single financial services group in India, they could sell it out without any price impact. You sold $35 billion between October 21 to June 22. Not only we gave you exit, we returned you your money. There was no delay, there was no desperation. This gives immense confidence to foreigners that India is a market where you have entry as well as exit. So undoubtedly there is FOMO, but this FOMO this time is with global investors, not with local investors. Local investors bought heavily when FPIs were selling in March 20, as well as October 21 to June 22. The foreigners are feeling left out, that India is such a great story and we are not overweight India, we are neutral weight India. Second, when people look at our performance, vis-a-vis most peer group, undoubtedly we are expensive from a valuation point of view compared to our peer group. But there is better earnings growth visibility, there are better governance standards, and there is also green transformation happening in our economy. This combination of 3G, growth, governance, and green, again excites people, and that creates FOMO among global investors. Put together, is the rally driven right now by flows? Undoubtedly, yes. But is the market looking horribly expensive? Answer is no. It is marginally above its fair value.